Looks like we are live. Mic check. Right, guys. Good morning on this beautiful Monday. Yesterday, I had Traders War Room number 50. Today, I'll be doing Traders War Room number 51. We did a lot of teaching about the market. We did a lot of teaching about the current market crash. And, you know, I won't be able to cover it in this particular video because in this particular video, I'm in a big rush to go through all the assets so that I can now spend the rest of the Monday building more positions in the markets. Those of you who are registered, remember you always have all my transparent trades in the master trader spreadsheet, my pending orders, stop loss entries, so you know where I am making money and if I am losing money, right? So that's what's happening. So I want to focus on that. Although, you know, we didn't look at you know, the fundamental tape for the week. This week. So we didn't even see what kind of news things were going on yesterday. And I do feel like this is actually quite a big week for the market. I do feel like, you know, I'm pretty okay with whatever it is I say when we're looking at different assets, but I would very much, you know, apply a lot of caution in the markets this week. I would honestly treat the markets as another potential week of a market crash, more flatlining. What's selling will most likely continue to sell. But it's a big week for things like AUD. We've got the, you know, cash rate tomorrow, Reserve Bank statement tomorrow. We've got GDP month-on-month rates for CAD tomorrow. We've got PMI for United States tomorrow, job openings tomorrow for United States, NZD employment change per quarter to quarter. You know, we've got a lot of stuff. Long story short, it's actually quite a big week, right? So I'm just looking at this list here, right? And then unemployment rate for NZD tomorrow. We've got AUD again on Wednesday, and AUD is of interest to me because I've got a position there right now. We've actually got a trigger trade moving along there, and then we've got the big non-farm payroll, right? The first prediction of our first indicator, and then straight after that, we know what's going to happen on Friday. All right, we know what's going to happen on Friday when you got, you know, but when I have NFP this particular Friday, and then you've got, and it's just a big week. It is just a big week for the markets, right? Euro policy statement, you know, like if you followed most of these guys' talks, you know, statements, that he actually kept moving the pound. A lot of the times he would create a very bad day for our swing positions. We wouldn't be kicked out because we entered early, but he would cause a lot of massive retracement, right? So just watch your backs this week. But not only watch your backs, you know, learn from what's going on, right? So if there's time and there's a need to, I don't mind sitting through all those events and just covering them one by one and breaking down what I think is going to happen before it happens. But for the most part, Monday is my only day off in the week, and I'm now using that this year to maintain and update the 365 spreadsheet. It actually takes about 6 hours, but I have to go through every single CO2 report from last week and start to add it in, right? It takes about 6 to 7 hours, so it's like a full day's work on my day off. But yeah, let's see if this will help, right? So our first asset today, and maybe just to give you guys a clear indication of this video, I'm going to do AUDJPY, Euro Swiss franc, Pound JPY, NZDUSD, USDJPY, CAD Swiss franc, Euro NZD, Pound AUD, and then NZDCAD, and we will be finished, right? Maybe it would be a good idea to do all the currency indexes by the time. Oh my goodness, can you see the chart in front of you? Oh my goodness. So this is AUDJPY, right? This is the non-starter. This is one of our trades from last year. I mean, I tell you guys, once you learn how to swing trade, which is not hard. So the thing you need to learn is once you learn supply and demand, once you learn supply and demand, the correct way to use it without money. This was, you know, a clean trade. So this is, we got in here. We got out in November because personally, I was about to start moving houses and I wasn't going to be available. And then I noticed that my partner was serious about wanting a holiday this year. I never take breaks in December. I normally would rest in March. So this year we took like a whole entire month off, and that meant I had to remove, you know, most of these trades off the table. So if you're mirroring my trades trade for trade, we got out of AUD in sometime in September, but this was a beautiful hold. We had another entry here. Look at the risk reward. 1:11, 1:10, eventually all the way down there. But It's not that this asset was short term. It continued falling without us all the way until the 3rd of December. Had we just held on, a little bit longer, we'd have made a whole lot more money. But that's okay, because the message is correct market reading around market structure with the use of supply and demand and the ability to just be patient and let money pay you back makes up a lot, right? So with very good low risky areas on the 1 hour time frame, markets, I'm assuming, arrived at a significant demand for such a big push up. Yeah, okay, cool. So it was a daily demand, right? So you can imagine how significant a daily demand is to a 1 hour chart, right? A 1 hour chart will bow down to a daily demand most of the time. There was a break of structure here. This demand came through. There's a little bit of a bench catch, and then markets returned back to where we did our second entry. And unfortunately, we're only covering this asset now for the first time this year. So had we seen this, I don't know if I would have wanted to sell there again. But you can see markets are playing the market memory game, trying to retest where we sold the last time, right? So there probably is an H4 supply or an H1 supply, somewhere here. Very beautiful bearish engulfing. Just want to see what's going on here. Right, there we go. So markets are replaying this area here, right? And then markets have been dropping ever since. So this is from about the 5th of January all the way to the last, day of January. Another perfect swing, guys. You get the stuff right. I know it's common to say if you want to be happy for the rest of your life, happy wife, happy life, but also in trade, happy swing, happy life, happy swing, happy life, right? So price has been creating these supplies on the smaller time frames, H4, etc., that none of them are tested, which means we can't trust all of it, and I'm here to find signals, not to teach. So let's see what we're looking at on the daily time frame. AUDJPY, and maybe let's first start off by confirming our bias. There's still time to sell this asset in the year 2022. Is it time to sell this asset in the year 2022, right? So it looks like I want to recover. Exit lock profits till here. Okay, so if there's a buy recovery, we've done all this selling now, and if it was time to buy, it would still be in the red zone, right? It would still be in the beginnings of a built-up buy. I don't know if I still feel strongly about this. Let's look at this old analysis for the buy. And if you to do that, you need to create a floor. All right, so let's start again. Right, so I just want to check our bias. Are we still selling, or is it time to buy? What a beautiful sell this was last year, right? Okay, look at this on the governor. Looks like a complete mess, right? Looks like a complete mess. By the way, if you attended yesterday's war rooms and me spilling water all over my computer affected your enjoyment of the war rooms, I do apologize. You will not believe this. As early as about 6:30 a.m., one of our staffers came to the house with a new mouse for me. Don't you just love? I love the people I work with, right? So they must have been keeping track of what was going on yesterday from their places, and they realized I need a new mouse. So look, I'm in full control. Look at this. Everything is back to normal. Working on a new motherboard, and they got me all ripe and ready by 7 a.m. Right. So and I appreciate that. Right. So this is what we have here. AUDJPY is, a risk-sensitive asset, right? And we kind of like were playing around these areas last year, around the idea of potentially a downside, a drop. We're not entirely sure how long it would last or how significant it would be, but it was enough to make us a little bit of money last year, right? But now the question is, what's the next sustained move in price? What is the next sustained move in price? Generally speaking, guys, if there's a supply but structure is broken on a governing time frame, I always, slowly but surely believe that eventually markets will continue in its impulse direction. Like for me, it's very rare that this holds forever, right? That markets do want to go up and up, they will go, right? So if this wants to proceed up, it will, but maybe it might require the use of a good demand, right? So a good pocket check, like come get some money down here, get a strong push to the upside, just in case the supply is hindering. So I would like to see sellers continue. And then we buy up with these guys to there. Right, or back into the zone and remove the zone, right? Let me not get too ahead of ourselves, right? A simple buy up back here is also perfect. That's kind of like where I would like to see this thing go. All right, for the most part, sell profile asset, but trying to adjust itself. AUDJPY also is very much a ranging market, right? It has been for years, right? For years. Right, for years, price really likes to range here, all right, range in between these particular levels. And I think if we're to draw a supply and demand curve, this is not a good curve because I'm just using my eyes, right? We all know to draw the curve accurate, you'd kind of like see that markets, you know, have been trading from the 100%, 75% towards the 50% downside, but then somewhere down here in COVID, when all risky assets got a boost in March 2020, the COVID, AUD, pound, euro, all those risk-sensitive assets, all of them bounce from a very good supply and demand curve area for buyers, right? So this is absolutely essential that, you know, all these things are kind of like clear. They have to be absolutely clear that we know exactly what it is that we're doing. So the question then is, well, is this push sustainable, right? Is this push really sustainable? Is anyone going to hold price up? And I think I would much more rather wait for price to come down before I can start pushing up, right? So I'm leaning towards the downside a bit more. I'm leaning towards the downside as long as things maintain themselves the way they are. If we come to the Mayorial time frame and the weekly time frame, goodness gracious! I mean, I decided to do this live on YouTube right now versus pre-recording, because if I pre-record, I have to send it to my team for slight edits, and then they have to put a logo, and I feel like that's just going to take time. But I didn't expect anyone to be watching live on YouTube. So if you are watching, let me know. I don't expect you to stay. I mean, I know it's a Monday morning, but yeah, cool. I'm just shocked to see that there actually are some people watching. Right. So AUDJPY, we've got some movement to the downside on the Mayorial time frame, and I think some of our trade sells were in this run last year up until the 3rd of December, where markets started to retrace. So immediately on the Mayorial time frame, I want to pop in a Fibonacci, because you see what the fib does is the fib confirms your bias on trend direction. We really know how to use number one, because if it is a downtrend, and then my golden ratio area should trigger a continuation to the downside. Does it do that? Yes, it does. Right there in the golden ratio area, boom, price just randomly turned. And honestly, me and you should have been in there to catch, you know, another beautiful sell right there in January. But then I was still on holiday until the 4th, right? So that sucks. But in any case, price created a turn at a golden ratio area. Price has also created a textbook module one supply in that particular area, and now has moved to the downside, maintaining a sequence of lower highs. And really what we need to see now is lower lows, right? So it'd be nice if price was to, I guess, bounce. It'd be nice if it was to remove this demand before coming back up and then continue to the downside like that, which means my next play is probably obviously going to be down there. I could never sell anywhere in here. I could never sell at the bottom. I could never sell at any of these demands. Once again, I don't expect anyone to be watching. I'm surprised that people are watching so early in the morning. God bless you. Please do let me know if you're around. I don't expect you to stay. I'm just pre-recording just to save time, so I don't have to edit the video. So pre-recording takes time, but if I just go live, just dump it there on YouTube so that you guys can operate. Right, so this is the weekly time frame. Now, if I am to really start to clean up my chart now, trying to find an entry, you'll know I'm a swing trader. You'll know I'm a very patient swing trader, which means I have no problem waiting for what is meant to be in the markets. You will never find me struggling to wait for what is meant to be in the markets, right? So, yeah, in the markets have been trying to consolidate, and if I show you the remote course inside our master spreadsheet, you will know that there's a lot of pressure for AUD to drop, right? AUD has a lot of sell side pressure, so this is not surprising. I just hope that the bus has not yet left us. I just hope that the bus has not yet left us, right? So if I can remove my fib, And then let's start to construct the reality here with some trend lines. So markets did bottom down, obviously on the 3rd of December when we were already out. So the few who took this beautiful swing trade with me last year, AUDJPY, markets, were negotiating some type of a bottom, and they found it, right? And it's not as tight as I would like it to be. So what I would have liked is for the bottom to be this tight. So when price makes it back to this supply, we break the trend structure, right? But the bottom is quite wide. And why I bring that up is because it's going to take a lot of work to the wider the bottom, the more price can move up or sideways before actually, breaking. And I like to take supplies, sell supplies that are very close to break of market structure, right? I love taking a sell somewhere here, because I'm already selling inside a supply and I'm also going to break structure right to the downside. So it makes a lot more sense and a lot safety. But I also can't force my ideas onto the market. You trade what you see, right? So the idea now is to clean up this area. And even if I use my Kinihashi candlesticks, it's not as clean because there is fear of being left behind due to the latest order block somewhere down there, beautiful imbalance into that part. But then that area of value becomes way too big, right? Look at that, because you have to swallow all of this. You can't assume that markets will stop here. Who told sell high, right? Markets could push up there, markets could push up there. And that's not really what I would personally like to do. It's not really how wide I would like, no matter the risk reward. And the risk reward might just be exactly 1:3. So I'm going to want to try and narrow this whole area down. I'm going to switch to H4 and then start to see really what's cooking here, right? So you got swing highs and swing lows. Once again, if you want, you can run a test on all of them. Swing high to this swing low. There you go, Fibonacci level, golden ratio. The yellow line is being used, right? That's all you want to know. You use the next swing low. There it is being used, and then I'm moving this to the next swing high. I'm rushing here, guys. I'm not teaching. I put an entire course. I'll put the link down below if you've never learned how to do market structuring correctly, right? So this one missed just by a little bit, and they took the 50% mark, which is for retail traders, right? So the retail trader mark was what was used here. So not much to do there. Drop it one more time, swing high, swing low, golden ratio, all that stuff, that good stuff there. That's also, where price could potentially come. So this is the only first area that I'm going to mark outside of all the other areas that need to be marked, right? So just to be clear, this is outside the big daily supply zone I triggered. So I'm just going to quickly put a red zone there and we'll come back to it. I'm just quickly now figuring out my touch and go points. Obviously, this is a non-brainer. This is a non-brainer. It's inside the daily zone. Number one. Number two, it is it is literally a golden Fibonacci retracement area. If you recall, we did this. If you recall, we did something like that, and then this was a swing. Where's the first one? The first swing high, swing low was there. So you see, this is a very important area of value. And even when you do the second big swing from there to there, that's still a golden ratio retracement area, right? So with that being said, on the H4 time frame, I've got two of these zones looking like this. Go back to normal candlesticks. I hope everyone is clear with me. I mean, I'm just don't want to teach, man. I'm just giving out signals. I'm talking fast. Because that's what we do in war. We just specialize in just giving out, exactly where price is going to touch and go. Right, and then that's a non-brainer, beautiful imbalance, price struggle to come back. Even if you cover the entire complicated 365 candle process, then you'll realize, okay, so this was this powerful supply creation, peak supply, and then markets reacted to that. You go back to the other candlesticks, you'll see, something of a similar story, rally base drop, right? Module 2 type supply, rally base drop. You want to see it. When you see it, you want to take it. You want to take it. So they took it, right? So I'm not so keen on selling here. Remember, this is our area of competition from the daily. This white line here, it's our area of competition for the daily, which makes this entire area of value wide. It's 200 pips, right? That's absolutely insane. And then what we now know is even in here on the H4 time frame, there is a possibility of at least this being, the first point of fall for an order block, reduces this area to about 174 pips. And we've done worse, we have done worse. On the daily time frame, this is what it now looks like. We now have 4 potential areas of value, right? It's a bearish engulfing pattern. It is. Is it not? Looks like it is. Oh man, thank you for this new mouse. I like it. I like it a lot, right? It does close below. And it almost kind of opens above. Right. So I guess for now, running the risk of being left behind, I would ignore this. Not really ignore, but acknowledge that price could come there, but just to leave us, and then I would narrow all of this down to something like that. So this is from a daily to daily perspective, and then inside this order block, we can then start to narrow things down to get a better risk to reward ratio. All right, so then on the H4 time frame, I would hold it like that. Right, but that being said, we run the risk of being left behind. Right, we run the risk of being left behind because the price might react to these short-term H4 supplies for a short while, then turn around. This area of value has now been reduced the best I can to about 108 pips, which is actually very close to the type of stuff we've been doing in all our other trades for the daily swings. Remember, guys, first we want to get in low risk, and then after that, we want to start to compound. So Sia asked, I have no idea what you just typed, bum.ngo. Maybe it's a different language, but thanks for typing something. I appreciate you. And I hope you can hear me loud and clear. I didn't even do a mic check. Right, so this is something that we want to remember. We want to first get in, and then after that, we're going to start compounding on the smaller time frame. But first, let's get the swing going. So if I was to do something that looks like an assessment of risk reward ratio, this trade is only worth it if you have the balls to hold it. You really have to hold it. Just like we held it last year, AUDJPY, back all the way down to the demand. This is going to give you a good 1:6. But right now, I won't lie, price is just marching down, man. It is absolutely on a mission, creating lower highs, breaking market structure, maintaining consistency all the way to the downside. So I honestly do not, personally, I don't see, this happening anytime soon. And when it does happen, we need to make sure that price will come back down, right? But this is interesting for me. I'm happy to take this trade. For cowboys, there's always a trade you can take on a day-to-day basis. I know my cowboys want to jump in on the sell trade right now, right? For cowboys, maybe, look here, maybe, right? I won't be with you on this trade. I don't take cowboy trades, but I can see this happening, right? There's a real possibility if the downtrend is as strong as we think it is, then why wouldn't this not happen, right? So this could happen between today and tomorrow, and then price hits here, just to continue dropping, right? So that's a cowboy trade that I will not be taking. I want to be clear. I will not be taking. I will not be putting this in the spreadsheet. It is not really, a good trade for me, right? But it could be an immediate money trade for you as long as you accept the risks that come with it, right? So yeah, look out for that and all the best. That's AUDJPY done. Next. Remember, I'm going to have to sit down for the rest of the day now with yesterday's war room and today's war room and actually put my final trade ideas. Right now, we're just doing an overview market scan. All right, overview market scan. Euro, Swiss franc. Everything I hate in this world ends with the Swiss franc. Swiss franc at the end. I don't like Swiss franc. Right, let's go. Let's see what we have here. Right, so price is supposed to come back down. It did. Now price is meant to come back up according to my analysis. This is a long time ago sale. It was beautiful when it happened, but I exited somewhere here, and I have not been ever since, right? So let's see if we can get another good trade running in Euro Swiss franc. Maybe let's just remove all the notes and all the analysis because we don't even have a trade running right now on this, I believe. Right, so why I hate Swiss franc is because I never, when I was learning supply and demand, in those years of study, what I did is I had to back test every single asset, as far back as all my brokers could give me data. And the one thing I never got around to doing, right? This is why I hate it. I hate it because I feel like I have a gap, right? It's a weakness of mine because I never actually got to sit down and study every single Swiss franc pair and the impact of these wicks, right? So I kind of like thumb suck them. Sometimes I'm right about them, sometimes I'm wrong. But if I want to be 100% sure, I need to go analyze every single one of these that ever happened on every single Swiss franc chart, and then come up with a qualitative scenario analysis on it. That's what I've done for every asset when it comes to every single order block, every single institutional level. That's how I know what has glass effect, what doesn't. It's just hours and hours and months and years of study of the asset. So this is the one thing that's in my blind spot. And then when I got so busy, when I started the academy, I just never got back to it. If you read my book, I don't talk about these things. I never talk about things that I am not yet sure about, right? So I'm saying this to say, for example, we could say we have arrived at a demand, right? We could say that. What we are not sure to say is the demand this big or this big? I don't want to lie to you. I'm not sure, right? It could be this big if you wanted it to be this big, but then price is digging deep. I can tell you that right now for sure. Right, so the next thing is we need to look for some price rejection. Obviously, we'll start to see that on the smaller time frames, right? But the honestly, for me right now, there is no telling whether this is going to continue to the downside or to the upside. What I do know is the last time I analyzed Euro Swiss franc, I know for a fact it's a sell profile asset. I know for a fact that buying here yields tears 9 out of 10 times, quickly. And this is short-term buys. But what this asset loves to do more than anything is to just continuously drop. It also has a tendency of leaving out supplies, so it will not come back. It'll create a specific area of value and then forget to come back to it, and then come back to it when it wants, and then not when it wants, and then it leaves stuff behind. And you never know, is it triggered, is it not? Area of competition met, is it not? Was it the right wick? But price will be seen. So it doesn't exactly make contact with these supplies, but we know that price is reacting from them. All right, and we've got something similar here. This is the first supply that was violated because there was a higher supply, right? So this is where price is now. And the next thing I want to do to help my buyers is to just get some type of, supply and demand and Fibonacci combination going. And I can see golden ratio is somewhere here. This is a PCP level at 38%. PCP stands for potential continuation pattern, and price continued going down, right? So I've got a thesis. Thesis basically is a sell profile asset. It's reacting to levels that we're used to. And the question is now, do I think price is going to come back again? Look, given the governing time frame, I'm honestly, not sure. I am honestly not sure. Price is trying to reject here in the month of January. And it doesn't look like it's going to give up much of a fight today, right? Because today is the last day for this candlestick. And this candlestick is giving us just normal vibes, man. It's not like a crazy candlestick language that would signal that price is about to start to reverse. Yes, it could reverse because it's almost an indecision type of candlestick, but we've seen many indecision candlesticks like here, for example, and price continuing with this pattern. We've seen this happen many times. So this could be the formation of a PCP. If I go to the Mayorial time frame for clarity, right, so inside this demand that we're assuming is a demand is a Mayorial supply very close by, and we can see that price literally tried to reach to it and then came back crashing down with a very big full body, red candlestick, and then went even lower. And then for the last 2 weeks, market has been trying to climb whatever was going on here. So we've got a weekly supply above a monthly demand, so to speak, if that is a demand. It's a big mess. Let's say there's a monthly demand there. I'm going to wait to sell here. Let's say there is a monthly demand there. This is where I would most likely wait to sell. This, I don't know what's going on here. I don't trust it. I don't like trading this asset. It doesn't butter my bread, So for me, it's no love lost. The uncertainty is honestly no love lost. But if for sure, this was a governing demand, for sure. I mean, it's so choppy, man. Look at this. order block after order block till it's the area, bearish engulfing pattern, you know, all these things up there. Right. If you wanted some quicker action, right, that's better. Okay, cool. So even on the daily time frame, inside the weekly area that we marked out, there is a strong daily supply. But the price didn't make contact. I mean, what do you make of this? Like there's a supply, but price did not actually make contact with that supply. But my golden ratio area is letting me know where the biggest discount is on the chart, which is somewhere there. So I don't mind taking a risk here. I don't mind taking a risk there. I don't care what's going on here. There's some tomfoolery is going on there. Right, so I'm not gonna risk money. I'm gonna do the right thing. So Euro Swiss franc, I don't mind putting an opinion order and waiting, but the opinion orders are going to be here and there, right? So this I'll let price play around, because remember, all these are PCPs, and PCPs tell us one thing for sure: there is not a lot of money to sustain massive hits in that area. While retail traders are taught that an area or a place is strong because of multiple hits like a resistance or support, we know for a fact that what moves price is money. The more times price comes to an area of value, the less money is left in that particular area of value. Now, because of that, I don't necessarily want to catch myself risking money here and just getting burnt. So I will be trying to sell here and definitely there. Right, why is the golden ratio area? This is a complete, untouched, big, very, bearish engulfing pattern on the daily time frame. Anyways, that needs to be sorted out, right? And then we can then talk about correct entry modes when I update the spreadsheet. But this is what Euro Swiss franc is looking like. Next, Pound JPY, the asset I don't want to trade. This is my losing asset of 2021, guys. I have lost about 3 times now to this, and that's not normal for me at where I am now in life, right? Normally, if I get burnt by an asset, I can figure out why. But as you can see, full transparency. I wanted to sell here, price went high. I mean, I guess some of these things, I know what the problem is. Then can I tell you what the problem is? Let me not pretend like I don't know what my problem is. So I've got a trading journal. My trading journal has already told me what my problem is with this thing. I got so excited about the drop. All right, and maybe this is a good lesson for everyone. I got so excited about the drop. You understand? This is let's remove June of last year, because I lost in September or June, I can't remember when, and then I lost $570 on a trade some time last year, and then I lost again. I broke even, luckily enough, but I was in good profits. I was like $800 in a second particular trade, and then I got stopped out of like $200 at some point as well with that trade that I just showed you now. Sorry, it won't do a replay for this type of candlesticks, right? So let's do this. Let's do a replay here. So let's say I want the replay power. Oh, there we go. All right, or maybe. Yeah, all right, because I'm about to start complaining. Right, so this is my problem. According to my trading journal from last year, this is my problem with this asset. I saw money. Don't do that. Don't make that mistake. I saw money. And a part of me did that because obviously I'm teaching people how to trade. And number one, number two, I really don't mind people day trading as long as they've got swing to positional accounts to build their wealth in the Forex market. And so when I see a chart so open like this, literally, I mean, just look at her. This is a strong monthly supply. Prices coming back for a retest. And sometime last year, I looked at this and I was like, oh my goodness, this is like thousands of pips. This is 1,730 pips. I don't care what the lot size you're using. I am saying there's almost 2,000 pips for grab here. So I lost my mind, man. I was like, damn. Because for me, holding a trade is no longer a problem. It is no longer a problem. Not for a lot of our students, swing trading has become, second nature. You just trust the process, trust the market. So all I cared about was quickly entering. Okay, so that's my mistake. I cared about quickly enter. I just wanted to be in. Even if you keep me on a negative for the next 2 weeks, 3 weeks, I don't care, because eventually you're going to start to fall. And what happened was price played with me, played with all my emotions, right? As price was going up and down, I kept getting tagged in and out of price, in and out of price. And so now it removed this setup here. All right, so it took out this bearish engulfing pattern because it went a little bit higher. All right, and then in terms of momentum, right, there's not much, right? There is an order block here, yes, but the PCP order block, right? But then it created a bearish engulfing pattern, and then it got a retest. Now it's got a fresh touch. Now it's got a retest, and price has returned. So we now know, with all these touches, not a lot of momentum. This area of value, governor or not, is now weak. And price is starting to prove that. It's really starting to prove that look, man, this drop that you wanted, you might not be getting this drop right now. And it's something that I need to slowly start to accept. Last year, I was in denial of this. I did not want it to happen. I didn't want price to almost drop without it, right? So maybe that's exactly the truth. I did not want price to leave me behind. I really wanted to chow this, but it's not happening. So let's see on the weekly time frame what's going on. Right. So this is not to say it's still not going to happen. It's just to say I am now much more cautiously aware of my bias. My bias was I wanted a strong sell, and I wanted that strong sell now. Just again, just to draw one here, but there's something going on there, right? So somewhat of an uneven trend line. And look at this imbalance. Look at market inefficiency. I mean, all of this needs to be filled out. Look at this. Those buyers need to meet the corresponding force, right? You know, yin and yang. Where's the yang to this yin here? We need to see some selling, chow all those positions, right? So I'm not hopeless, right? There's still a supply, governing supply in chart. I'm just saying, be very mindful of how strong it is. Number one. Number two, inside this governing supply, I think for me now, because of the number of times I've been burnt, it will be advisable to go back to module one, the absolute basics of our course, and remind ourselves of the common universal principles of supply and demand, which is to sell high, baby, and buy low, right? So the entire area of value is provoked by this, a dodge candle. But if we come to normal candlesticks, you will realize that it's a bearish engulfing pattern, right? So we just simply take the highest point of all of this, and then we reassess our thought process, right? So we've got a kiss, fresh touch, and we've got a kiss for a retest. Now, these kisses are very light. They're picks, right? They haven't started digging into the area of value. Number one, remember, I have a blind side to pound JPY. From a trading psychology perspective, it's bit me 3 times, and that's not normal for me. So take this, this particular signal, just remembering that, this guy's got a terrible blind side. Part of me wants to beat it, which is why if you ask my coach, he'll tell you don't trade it. We actually had a meeting in December when that's the only thing I did this holiday, and just to touch base with my mentor. And this is one of the assets I'm not supposed to trade for this year. Like, just break up with it. But this is attractive, because if we get a break of market structure here, oh my goodness, man! If we get a break of market structure here, guys, to the downside, ain't nothing going to stop us, right? Nothing is going to stop us. And maybe when we discuss currency indexes later on today or tomorrow or on Sunday when we meet again, we can then start to see the strength of the pound versus the yen. And then maybe let's do that quickly. Let's look at the strength of the pound, BXY. So let's quickly, just to help me scratch this itch. Look, this thing is to drop, right? So the pound needs to weaken. The pound needs to weaken. Yeah. Fine. It got to a PCP demand. Blah, 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 right? And then that's January. It got here actually last year, November, then December, and then January is trying to almost kind of like, show some force of strength with the almost a green candle. We know that Euro USD did the exact same thing, hit a demand and then went up, went back down, right? But there's not much I can do until there's clarity, right? JXY, let's look at the Japanese yen currency strength index. JXY, come on, man. Still falling, still weak. We spoke about this a long time ago. JXY is going to be very weak, and that's the problem. So because the Japanese index is extremely weak and is still falling and it still has a trajectory to fall, when we look at pound that just left a governing demand, right? against an asset that is continuously weakening, we've got a problem. We genuinely do have a problem. I don't think this is where I was doing my analysis, but you can see here in my live account, I've decided to sell right at the top. And I think that's wise. Ignore what's going on down here where I've been burnt and wait to sell up there. So let's go back to the chart I was actually working on for the final signal. So the final signal for pound is to tighten this area up, tighten it up in here. So we found that weekly high weekly supply. And the problem is here, guys, sorry, pound is strong. It's going, leaving a governing demand. JPY is still falling. It's weak. So to get pound JPY to sell, you essentially need JPY, pound to be very weak right now. You need it to be weak to go against a weakening asset to fall. And that's not the case right now because pound is slightly stronger. It's leaving a governing demand while JPY is falling. So that's why this chart keeps pushing to the upside. But eventually things will self-correct. So when they do, I want to be ready. I want to be ready. So I'm going to come here now on the daily time frame. This is my last pound JPY trade, my redemption trade. And come December, I'm going to have to explain this because it's going to be in my trading statement. So in my funds, or in Italy, when we have our next scheduled meeting, it's going to want to know why I broke rank here. All right, so on the daily, so this is the ultimate supply causing the chain movement in weekly and monthly, right? We found it right there. Right there, right? So it's got a little bit of a complicated 5 pattern into a bearish engulfing, beautiful swing, fresh touch, beautiful, right? This was a nice trade to take a long time ago. And then markets have finally made it back, have they, into this area, right? So the fresh touch, let's take it, guys. The fresh touch happened. You guys just saw me do the MTA. The fresh touch happened. I'm still playing with chickens down here. I'm still playing with chickens, right? So it's a good drop, but I'm pretty sure I tried to sell here last time and I got burnt. And now this is happening, right? Let price do whatever it does. We have some good orders here left for a retest. We have some good orders here for a retest, or at least I'd like to believe. I'd like to believe that we do have some good orders there for a retest. Now that I've excitedly found, I've convinced myself, right? I've convinced myself that there's still hope on pound JPY, right? So I'm gonna let this play out and wait for price to come here. And I think that's what I had in my previous chart anyways, where to sell up there. Just classical MTA, nothing fancy, keeping it simple. And I'm pretty sure the retest might even go deeper. So I could even do something like this. Get that nice and close. I could do something like that, right? So that's what I'm personally gonna do. If you're a 365 student, then this is like common sense for you. You know what to do next, right? So let's have a look. So the area of value is quite big, very small lot sizes, ladies and gentlemen. Only way you're gonna make your money here is if you hold. Only way you're gonna make your money here is if you hold, because the area of value is quite big. But if we are lucky, we might get a good run here. We might actually get a good run. We shall see, right? That's pound JPY. I'm going to keep it pushing, keep it moving. NZDUSD is the next one. NZDUSD. Okay. Isn't it nice when you just open a chart in last year's analysis? It's just continuing to do what you said it was going to do on a public war room like this. I don't even, this year in the spreadsheet, I'm actually keeping track of which asset I said in which forum, because people be playing with us, But this is so, it's encouraging. This is so important for your psychology. Like, damn, I was right again. Damn, I lost here. Why? Okay, but I was right here. Okay, I was more right than wrong. So if I'm more right than wrong and I've got a good risk to reward, basis in my trading setup, I will always end up profitable by the end of the year, by the end of the financial quarter. This is not a month-end type of game. All right, not when you're starting, because most of you start with very little capital. That's problem number one, and that's okay. You come in with what you can afford, but because you're coming with what you can afford, never, ever anticipate that you can, the same way you can't go outside and just command trees to grow 10 times at the faster rate. You can't do that to your trading account. What you want to do though is to show up for your trading account every single damn day and be consistent. Be consistent with very good risk management. Make the $3. Make the $4 per trade, make the $10 per trade, make the $20 per trade. You keep doing that, and one day you're going to blink and you're going to be making $200 per trade. And the more consistent you become, the bigger your account becomes. And sooner rather than later, you will actually find it pleasurable to be making more deposits into your trading account to quickly grow your capital, but only after you've built a process. Your process is key. Your process is key. I don't want to teach, but I promise you, those who are patient will know. I mean, I've done this with 108 people. They are six-figure traders. It's no longer luck anymore. Like I'm not guessing my process here, right? So on the NZDUSD, I just quickly came to a free chart to work from. We've got the break of market structure from the year 2000, that boom.com year, which is quite interesting, very interesting, because you would think something like this would be edge a little bit higher, but we do know that the dollar is strong. DXY, FOMC is just pumping that baby up there. And with the announcement of potential interest rate hikes on the 16th of March, it can only be that this thing will continue to drop as the dollar continues to soar high. So what we want to do is to reposition ourselves. From the governing perspective, we now have a new immediate area of value that has been introduced, that is sitting on top of another big supply, which is sitting on top of another big supply. Basically, their commitment to selling is equal, to a religious belief at this stage, right? It's very, 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 coerced with order blocks upon order blocks to push this asset down. Right, okay, fine. And for the most part, we want to know where the immediate area of value will be, where this drop will stop, and then we can then start to negotiate around areas of value and etc. So but something that looks like that. Funny how I'm not interested in this area here. I'm really not. It doesn't seem to me that markets are right. So we know that the potentially could be a retest, right? It could be people will accredit to this, but actually that's just the nature of bearish engulfing, order blocks. And even if you accredit to this, you've got 1, 2, then a third, right? So it's not the greatest imbalance in the world. So I'm not really focused on that. If I go to the weekly time frame, I'm now looking for a ride. I'm now looking for some type of confluence, I'm going to delete all these things that I was drawing dramatically for you, just so I can see the chart a little bit clearer. All right, so I like what I see, but let's just confirm it, right? Okay, everything's fine. Right, so we've got something going on here. So this is a weekly confluence inside that monthly new immediate area of value or demand or whatever. All right, I like that. I like that a lot. All right, so that's number one. Number two, though, however, always play devil's advocate with yourself all the time. If markets decide to treat me like my ex-partner did, those of you are terrible ex-partners, right? This is what you're looking for. This is what you're looking for. I mean, if you get betrayed here, right, then life is tough. But for the most part, the markets, look at this beautiful demand, right? Look at the commitment to hold price up last year or 2020 October. Look what markets have done to that. They don't care. They don't care about no buyers no more, right? NZD has to fall, right? So there's like war on this thing. And then we start to tighten areas of value. For example, let's say we wait for price to come all the way down there. All right, then we've got some action here. So let's remove this, because that's a broken demand, and then let's wait for a play in here, a play in here and a play in there. Then we switch to our daily now, hoping to see if there is a corresponding daily supply. I don't mind the Sundays 4:30 p.m. war rooms, but I have to tell you, it's so nice to do this first thing in the morning. I am a morning guy, guys. My battery is low by 5 p.m. You couple the fact that I get up at 4 a.m. every day. My battery is just low. My battery is low by like 5 p.m. And I still have to do a lot of stuff until about 9-ish. So it'll be so nice if we had like 4 a.m. more rooms, but Who would wake up for that? Except for me, right? So there we go. So we've got this a daily supply and a weekly supply. A daily supply inside the weekly supply. This is the mother load, right? So I would take that trade. I would take that trade. There's actually also a risk of being left behind. If I'm being honest with you, I hate being left behind by price. So that's why I love the bigger time frames. But for the most part, markets do come back into all the zones and do the right thing. But this daily supply here is el perfecto. You know, one would argue for that. I would understand. But I know some would even want to wait for that, for the perfectionist. So I would probably on NZDUSD have 2 pending orders. This is not, it's a rare that I do this often, but I want to explain it very carefully. I'm deleting the outer layer so you can see this carefully. 2 pending orders. Unfortunately, exercise smart risk management. 1 pending order here and the stop loss out there. This one's going to have a very small lot size, a smaller lot size because of how much I am spending in pips. You understand? I'm risking more pips, so it can't just because it's the first one to go and you run the risk of the one with the small lot size being the only trade that gets triggered, right? But it's 156 pips, that's fine. And then I'm going to also have a pending order right here where I have half the size of pips, which will allow me to have slightly a bigger lot size. Depending on your capital, you know how we do lot size in the academy. So that's kind of like how I would play this. That's kind of like how I would absolutely play this in this particular area of value here. And then we shall see, right? We shall see. But I'm very happy with these 2 areas on the daily. Now I just need price to come. Let's say price is perchance turning right now. You see how there's your golden ratio area? You see why you cannot not have this. Because it sits right by your golden ratio area. You see that, right? I know my chart is a big mess, but you see this here. This is your 61.8. Like I can just see these things with my eyes now, but it's just important. I always remember to pull out the tools, right? So I can't forego that. Honestly, I cannot forego that. I cannot pretend like I didn't see it. But NZDUSD smashed. USDJPY. USDJPY. For those of you who are actually watching live, talk to me. Who are you? Who's watching live? There are a couple of you there. I'm surprised and shocked and happy. Just hit me up on the text. They say something. Who's this? Who's around? Appreciate you. Just let me know who it is. Who's up in the morning? I promise I won't make it a thing. I won't expect you to show up all the time. I just want to know. Right. USDJPY has been on a run. USDJPY has been on a run. It's been on a run, like we did say, right? I talked to you guys about this. I told you guys about policy, monetary policy divergence, strong dollar from a fundamental perspective, weak JPY, perfect trade, nom, right? We've been buying, but also been waiting to get some of our buys triggered. We've been also waiting, right? So it doesn't help if you're right that the asset is going to go up if the asset doesn't actually come back to trigger your trade. Right, so I don't want to do too much here. I was hoping that the strong dollar flashback that we got about 2 weeks ago was actually going to push price down, and it did push price down. But I didn't want price to get caught here. I wanted price to really come down to that particular buy, but it didn't. On a governing perspective, the target is all the way up here. So patience, grasshopper, right? For my long-term perspective, I am still hopeful that this buy will work or somewhere there, but the real target is up here for this pair before the entire world changes its perspective about what to do with USDJPY. So there's not much to do on this chart. I'm sure there's one of those things that are in the 365 phase 1 document in our remote course with my October signals, etc. I'd love to buy you down there, sir. I would love to buy you down there. I don't mind price coming all the way down here, but I'm sure this will have to hold for a while. This definitely has to hold. Meanwhile, we can assess what's been going on, right? The commitment to hold price up is valid, right? As long as the dollar is strong and yen is weak, there'll be a price to pay. But if things start to change, and I hope they change soon enough, then we might actually get the effects that we want, which is to get triggered down there. Now, should we sell? Should we find a place to sell all the way to where we want to buy? And there's to answer that better, the question would be, how desperate are you, to make money right now in the markets? I'm never desperate. Being desperate has always brought me back down to my knees, and not in prayer, my knees in crying because I lost money, right? So I don't like desperate trade calls. But if you were to, approach the sell, the time is soon. It's not now, it is soon. In a bearish engulfing pattern being denied. So maybe somewhere in this yellow block we'll finally get a push down. If we do get a push down, then the question would be, will that daily demand work? I hope it does, because this will be a very good place to buy. Already we're at a good 1:1 risk reward ratio, 1:3. But when price comes back, imagine it paving the way. So let's say they remove the supply here. Just hold it. Just hold it. Just hold it. Just hold it. If they remove the supply, listen to the English, guys. If they remove the supply, hold. If they don't remove the supply, you take your 1:4 and you make your money and you call it a day, right? I will not be selling down here. I don't experiment with money, not at this stage of my life anyways. But yeah, it's up to you. So USDJPY, the signal is clear, locked in. Hey, but brother, I owe you a one-on-one, Ivan. They will be starting soon, so just check your emails. They will be starting soon. I haven't done anyone. It's not like it's just you. I haven't done anyone since last year. I have not sat down to do one-on-ones, but I actually remember every single person who's been waiting for one in the mentorship program. They will start soon. But good to have you. Good to have you, sir. How's Kenya? Hey, do you know what I found out about Kenya the other day? Kenya has the most cryptocurrency holders in Africa. What's going on in Kenya? I'm ready to come buy a house there. You guys are literally the forward fronting face of Africa. The most crypto holders in Africa is Kenya. I was pleasantly surprised by this. I won't lie, I was pleasantly surprised. But let me just double check those facts. But I believe it said Kenya, most crypto holders in Africa, unless if I am misquoting myself. Okay, there's a list of which countries use it. Which country is the most crypto? Okay, that's not in Africa though. All right, I'll find it for you. I'll find those stats for you. But I actually found that quite encouraging. Go Kenya. Keep it pushing. Right, so CAD Swiss franc. We are almost done, guys. We've got 3 more assets left to do after this. CAD Swiss franc. I hate this thing, man. Look at this terrible ugly range, broke out, then sold. Everything that we said was going to do. I'm so sorry, but I'm not even going to bother myself with the signal here. I don't trade range in markets like this. Like long-term ranges, this governor, this chart needs to just figure out what it's about. So for me, to you, I am moving on. EURNZD. I don't want to waste your time. Right, so EURNZD, has been a little bit quiet, man. EURNZD has been, hasn't been getting the love and attention it deserves. But basically, sell proper asset from, market crash days, right? Now let's just mark key areas here. We've got the supply that let price know you shall not pass, right? And this was tagged in April 2020. So interesting enough, when all risky assets, euros, AUDs, blah blah blah, were flying high from March 2020 to go up. Because remember, you have to know your assets, right? This asset was one of the few that was going down, EURNZD. Everything else, guys, Euro USD, AUD USD, NZD USD, all those risky assets were shooting up. This one shot down. Went up during COVID, but after that, just came back down, right? Literally just came back down, right? And because of how much money was left in this particular place. So it arrived at a market crash significant supply of 2009, which we teach a lot about. You guys are seeing the stuff in the course. All right, so what to do? I have no choice but to assume you are going down, 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 down. Yeah, I think it's going down. I mean, it might retrace before it goes down, but I do think it's going down, right? If we're to look for a favorable demand right now, you'd be lying to yourself because it's broken. Whatever you're seeing with your eyes here, it's broken. And you really can't it's dangerous to draw complicated 365 candles like this. Very dangerous. So then the area of value is way too big. Look at Brent, right? So the reality is, even in normal candlesticks, this could be potentially a demand, potentially, but that's not where we are right now. And it doesn't have the best imbalance, right? It's not a bullish engulfing. So the imbalance, the criteria of the imbalance matters. And that's really not what we have today. That's really not what we have there. So I would be very, 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 very scared to rush to buy. I would very much rather sell. But the question is, where do we sell, right? Do we sell here? Is price presenting some strong selling opportunities here? We know euro is still a bit weak. We know it still has to drop a little bit just in general. Let's have a look at euro EXY, which really looks like euro USD. EXY really looks like euro USD. So you can see there's a weekly demand that was here, and there's another weekly demand here, and the governing demand might be this big. Oh, okay. EXY. That took me aback by surprise. I wasn't expecting that. Kind of like happened fast, right? Like boom, we've arrived. Hello. I was not expecting that at all. I feel like I was looking at Euro USD just last week. I mean, even if I was to choose that, right, there's still an issue of area of competition. Let's have a look at the weekly time frame. All right, cool. So, let's remove that, right? So we still have a drop to go according to the weekly time frame, but we are in somewhat bullish territory. Just be very mindful of that. Like not yet, but we're getting there, right? It's absolutely important that we start to wrap up our euro sell. That's still a bit of a way to go, but we're getting very close to this thing, no longer being as weak as we think it is, right? NZD is NXY, the New Zealand dollar. No, it's actually Z, because New Zealand is ZXY. Am I right? Yes, I am, right, ZXY. All right, so you got before touches, strong push, breakout, pain and structure, did not go up. I don't know what this arrow means. I can't remember. Did I want it to go up? Maybe I did at the time. But price is still floating down. Let's see on the weekly. All right, into a demand. Okay, that makes sense. But will the demand hold? That's the question. And let's adjust. There we go. Kept this imbalance, right? So this doesn't even make sense. Long story short, in terms of structure, yes, it's supposed to pump up, but the question is from where? We finally arrived at a strong weekly-ish demand, but price has actually gotten halfway through and is now starting to collect order flows to the upside. But I don't know if they're enough. Honestly speaking, no, they don't look enough. They really don't look enough. In fact, you might get a situation where price only pumps up to resell. So you've got a weak NZD and a weak euro, which makes it one of those assets that actually dropped when everything else was going up. That's why, the correlation is just annoying, right? So back to the governing chart. I'm still here. Sorry, I was just drinking some water. Right. So I do think I still want to sell. I do still want to sell. I'm not convinced in the buy yet. I do want to sell. I don't want to sell here though. Order blocks have been violated. I mean, there are other smarter ways to catch a sell like this, right? You could do a sell stop, right? And then if price does turns. I haven't traded with a sell stop in a very long time. So for me, it's not really what I'm going to do. So what I'm going to do is start to really investigate each order block carefully. So we also have that there. Right, so we've got two sell order blocks, but this one already has a touch, and then this one here has all this stuff going on in there. So that's what our weekly time frame is bringing to us. Then we're going to switch to daily to see if there's any single fresh area of value, and there's an intersection here. I like that. We'll come back to it later. We'll come back to this part here. Right, we'll come back to that. I just want to investigate everything about this area of value. Inside this daily, we can tighten this to be that. Right, you can tighten that. Price did come back for a fresh pull, but markets are not really here for the first time, right? So markets have had a full-blown reaction here. Must be very careful. Markets, however, on the daily have never had a full reaction here. Problem number 2. All right, so now let's remove the weekly supply, make this area a little bit clean, and then start to play perhaps price, you know, come somewhere here. And it has on Friday. Price came here on Friday, guys. Had I known this last week, I would have taken this trade. Price came back here literally on Friday. Today is Monday and markets are dropping. Had I known this last week, I would have taken this trade. Let's see what we can do. So now, man, oh. This is probably a good 1:3 somewhere down here. That is probably from there to there a good 1:3. So that would have been a good trade to take, but we missed it. We missed it because there's never enough time in the war room to do all the assets, right? Because life is just tough like that, right? So what to do? Let's go to H4. Yeah, the price is just falling. Even if we'd done this asset yesterday, you know, maybe I would have walked in with, you know, the fire for life. Wait a minute, this H4. All right, cool. So we're gonna have to come back for. So we've got a fresh touch on the daily. All right, as you can see for yourselves, we've got a fresh touch on the daily. There's nothing we can do about that. We're gonna have to wait for a retest on the daily, and the best way to get the retest on the daily is to find the higher supply inside the daily in the H4. Classic multiple time frame analysis. The only way to do it right. And also what that does is it actually lessens, you know, the risks because you're closer to your stop loss. So if you do lose, you're going to lose very little if you're, you know, soberly risking your assets. So I would do something like that on the H4 time frame, which is already inside the daily time frame. All right, so that's what that's going to look like. So I'm going to have to wait for price to come in there for a retouch, probably sometime during the week. Price will have to go down to that H4 daily demand, come back up, and then hopefully we get a nice retest of this zone here. And I just want to see what it looks like on the daily chart. Sorry. Yeah, so into those wicks there. Right, so that's what I'm going to do with EURNZD. I'm going to try my luck here. It's quite a small area to risk money, so it's not going to be a train smash if it doesn't work. But the fresh touch, the safe touch is happening right now, right? So, you know, you could get a bounce to this area. If it does work out, you know, in terms of take profits, I'm so pro selling this thing. Look at this, there's nothing. If it does work out, I'll probably look to exit somewhere there in line with the weekly. Right, somewhere there in line with the weekly. That's what I'll do. EURNZD done. Pound AUD. Right, you see this continuous push into the small multi-supply. Let's look at the governing supply. Right, so markets have just been pushing to the upside, right? There's not much to do. There's pretty much still probably no entry. But we're starting to get into some serious sell territory. So I would start to sharpen my tools in here. For the most part, markets have been pushing up, you know, since 2013. So yeah, so we were quite deep into its original plan of coming back to the supply. In terms of assets, I'm pretty sure the sell profile asset, right? It is right. So markets have just been moving from a governing, and a major turning point demand, and making their way back up to all these supplies that were created on the way down. Now, in terms of trading, no, I don't trust any of these stuff, all this stuff here. I don't trust it. Only because, it does react, but price will always come back up because major turning point demand is pushing it up. So what I want to do is to wait for the actual moneymaker, the governor. Right, the governor, you see that there's really no PCP volume, right? So that's why price will dip, but also return, right? You have to wait for this King Kong, right? So, if you're brave, you would find some buys to go up with this structure. All right. Okay, well, there's one up here. So you see that supplier mark, there's this one, which is first see how price deals with that. Let's go to the weekly quickly. Let's go to the weekly quickly. There's nothing. Okay, man, look, I guess you could try your luck here. I just know that lower supplies are extremely stubborn. But anyways, price has already reacted and come back and recovered. Maybe it's gonna go in deeper, I don't know. I don't think I'm gonna trade this asset. I think I'm gonna wait for this phase of the market to complete itself. Come on. There we go. I don't think. So this is where we are now. We're here. All right. We are here. All right. So I guess we could wait for a daily supply to push price down. Just want to see a corresponding supply that would be very good for that. So maybe here. Could wait for a daily supply to push price down, and then when price is pushed down, then we can start to look to buy up deeper into the supply, or you could take the daily supply yourself. I will not be doing. There's nothing I'll be doing on this chart. There's really nothing. This market is okay for some choppy action, but it's really I want to catch the better sale. Okay, so I'll do nothing here for the most part. But if you're to buy up, if markets do push down, let's pull up the Fibonacci. Let's say markets touch there and turn immediately. All right, if they go deeper, I can't even give you a good forecast. So 365 students, you're gonna have to use the course material to validify areas of value, whether you want to take a buy there or there. Naturally, lower is always better. I repeat, lower is always better. Lower is always better. When you're given two options, lower is always better. And then you want to hold that buy up, or you want to be a seller, which to me makes more sense. But as a seller, I'll catch you guys here. I'll come back, revisit this thing when it comes here, maybe come there, but really this is where I want to be on pound AUD in the long run, right? Pound AUD, and the last asset of the day, ladies and gentlemen, thank you for sticking around. For those of you watching so early in the morning, NZDCAD, and that completes our what I wanted to do was to overlook all these forex assets that I'll be looking to make money from for the rest of the year. And then now we can do cool stuff like manage positions. We can start to compound into these positions. We can start to then apply module 3 and take smaller time frame trades into these positions. Oh, what's going on here? Somebody's angry. NZD just running deep. Okay, so that's also because of this. Yeah. All right. So CAD was quite strong last year, given the oil pump, and I think there's going to be a new oil pump anyways this year as well. So geez, right, complete eradication, right? So this area of value will soon be broken. It will soon be useless, and I mean it's a no-brainer. Markets want to sell, so when they want to sell, we want to sell with them. Question is, don't you wish you were in here? I'm sure there were so many lots. There had to be a retest on the daily for us to jump in. Do you guys see this stuff? I mean, there's money all the time. It's just that if you miss the right week, see, I told you there's a retest. There's always a retest, right? So markets started to sell, markets came back, markets sold, markets came back, markets sold. And then that's all they've been doing. All right, so now the perfect place to wait for an entry, in my humble opinion, in NZDCAD. But I feel like this area of value is broken. Yeah, it's broken. It's broken. It's broken. There is no demand here. It is broken, right? So outweight here. Look, it's outweight here. I would really wait there inside that yellow block that I've just given you. Let's give this clear momentum. I would only take this if it's a good retracement area as a first place. So let's say price did bounce here. Let's say price has already broken that demand, but let's say market started to turn. Just want to see if there's a demand. Right, cool. There are many dips here. Right, so let's say one of these dips was strong enough to force price to start to turn sooner rather than later. Whether the dip happens somewhere there or even lower, right? We've got the situation right now. Right now, we don't have a swing low. Price has not started to swing low yet. But let's say it did. When price decides to start to swing low properly, so we'll need another daily green candle for tomorrow to say there is one. Then in our golden ratio area, we've got this situation here. Cowboys, you know, here as well. But I would wait here. I would wait here. It's the closest thing to this, and also have one day, right? So that's what I would do, right? So let's have a look now at that, those labels there. But anyways, guys, this is the last chart. Thank you so much. Have a beautiful, blessed trading week. 365 traders, keep track of the spreadsheet only at night though, because I'm going to spend the whole day, you know, amongst many other things, doing what I have to do. So even it's probably wise I'm going to check it tomorrow afternoon. There'll be new pending orders that I've put in there for you guys. There will be my final thoughts on the assets we looked at yesterday and now today, so that you guys know exactly what it is that I want to do in the FX markets, gold and silver markets, NASDAQ, and all the other things that we discussed yesterday and today, right? But we do have a double cluster here, man. Right, so, you know, two ways. One way is, well, small lot size to cover both areas. Because remember, the money isn't based on maximizing your counting areas. The money is in actually the ability to accumulate long term, right? So you could do a small lot size to swallow that. You could do a small lot size just for the first area here. Sorry, that's the wrong thing there, right? So just for this order block right here. Right, smaller size for that, and then if you get tagged out for whatever reason, then you can then have a second pinning order here to put you out, right? But it's really, to me, it works out the same, because whatever you're going to use is probably double. So if you make half of the two lot sizes for these two trades, might as well just hold this whole area. But that's just me. And then the bottom of this trade is what's going to be tricky to find. The bottom, because this is not really a trend line. I was just drawing somewhat of the beginning of the channel. But let's see if we can self-correct this now. All right, so price is just bottoming out. Right, the bottom here is going to be very interesting, in my humble opinion, wherever the bottom is going to be. But that's something that you and I need to figure out quickly where we'd like to stop price from falling. Let me just quickly draw some extended ray lines. There is one here. Then there is that. Right. So it seems to me I would maintain this white line as my take profit, as my bottom. Right. So if price comes back all the way up there, I would maintain this white line as my take profit. Right. So price might continue falling, and then we'll get a swing low here. Now, if we get a swing low there, just pull up the Fibonacci one more time. If we get a swing low there, then you'll see now why I said only if this is a good fib area would I take it. If the swing low comes all the way there, I hope I'm clear. My golden ratio is here, so I'd love to jump on that as well. Right, so it's just it's one of those charts that you have to sit and watch, right? If it keeps dropping for another 3 days and the swing low is here, I'm going to sell there. If it's not and price does to come back for a retracement, I'm going to catch the trade somewhere up there. Right, guys, I appreciate you so much. I have no idea what BUM.NGO is or what the two people in there are typing. But thank you so much for watching. I am Audi. Have a beautiful Monday. It's 9 a.m. time to go see what we can do for short-term trades in the London session, right? For 10 minutes before the London market starts going crazy. Right. Cheers, everybody. Have a good day. I'm ending the stream. Goodbye. 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 Well, I can't even find. I don't know where to end the stream. Ah, there we go. 365. Everybody, shake.